The trade deadline next Friday, August 1st, is looming, but deals are coming, and with big countries too. Japan was last night. Apparently, the EU was today. So they seem to be getting it together, and the market's loving it. We have vaulted lifetime highs pretty much across the board. I mean, there are some exceptions like the Russell 2000, things like that, but on the whole, lifetime highs everywhere you look. It is a big day for earnings. This is the juicy stuff. We've got ServiceNow, Alphabet, Tesla, IBM. A lot of action after the close today. So let's jump in and look at the lifetime high charts together. We begin with a spider, and this fella spent a little time hugging this midline, but afterwards it is respected that as support, up, 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 and now we've vaulted higher like so. So S&P 500, S&P 100, etc., all cleanly at lifetime highs. The diamonds also finally burst forth. Just a few weeks ago, this was a real laggard. It was way down here, well beneath its own height. It had a peak here and here, and then back here, even with tech stocks raging, the diamonds, the Dow Industrials were a little bit mushy. They've really caught up. And today they've zipped higher so that the diamond ETF at least is at a lifetime high. I haven't checked the Dow Industrial average itself, the cash index. There are instances where the ETF can be at a lifetime high because of dividends, whereas the cash index isn't. So suffice it to say that diamonds never before seen levels. And the IWM, the small caps, in this case, also strong. These are up about 1.25%. The next major resistance on this, and it's not especially important, but it's really all we've got at this point, is this dash red line, which was the last principal lower high. So here's the lifetime high like so, back in November. Here's the lower high, which was back in this February. And we're getting kind of close to it now, but haven't crossed it yet. So the lower highs are still intact for the small caps. Outside the U.S., also strong. Emerging markets, EEM, not at lifetime highs, but very steadily higher ever since this April 8th bottom here. It's been almost an uninterrupted string of plus signs. So this is a recovery high on the emerging markets. The lifetime high, though, back from 2021, still intact up there. And China, also strong, not quite 1%. The only slightly interesting tidbit on this one is this trend line, which we're getting close to. This had been support for decades. Recently, as you can see here, and perhaps today, this line does represent important resistance, which we haven't been above that line since February 2022. So literally, this has served as resistance for years, and this is a new recovery high for China. So quite lofty if you consider that line to still be intact as resistance. Earnings last night weren't as thrilling as earnings tonight are going to be, but there's some big ones. Intuitive Surgical, ISRG. If you were watching this like I was last night after it was announced, at first it roared higher, huge gain. Then it collapsed lower, and then it went to almost exactly unchanged. So it looked like an EKG appropriately enough. So it was just all over the place. Once all the dust settled and you got into the day session, the market has kind of resolutely just sold the thing off. So ISRG, I didn't have a position in this. I tossed out. I was inclined to think it would go down, and it's down, not dramatically, but it is down over 2%. So the lifetime high very much intact here from early this year, and it's just been lower high, lower high, lower high, lower high, one after the other, like so. We did open strong this morning, but you can see a big bearish engulfing pattern. That is to say, the open here, the last, which will be the close before long, here gobbling up all of yesterday's bar. So bearish engulfing pattern right there. Now, the other item which went down and stayed down was Texas Instruments. It's TXN. And this is down quite hard. Texas Instruments down 13.5%. This is a pretty big company, almost $30. And its own lifetime high was very recent, right there this very month on July 11. It peaked at 221.69, and we've shed about $36 or so off of that, most of which is today. So we've been easing down, and then just a plunge today. Opened weak, and it's been selling off ever since. So there's some lucky ducks out there that are long, some short-dated puts that have, I'm sure, big triple-digit gains. This was a real wipeout. Now, as much as I've been involved in tech, to me, just a semiconductor was a semiconductor. That's not true. It turns out that companies like Texas Instruments are more about analog semiconductors, which to me is like a contradiction in terms, almost like an oxymoron, but it's a thing. And so if someone saw Texas Instruments getting wiped out, they might assume, oh, Nvidia must be having a terrible time too. No, they're up. Digital and analog, different worlds. So TXM was down. That bled over in sympathy to ON Semiconductors, ON, which is down over 4%. And this is a chart I've mentioned a bunch of times because of this rather substantial top that it's got. And also microchip technology down over 6%. So these are sort of in the same genre as TXN, so they're feeling the heat from that. But like I said, all semiconductors are not the same, and so Nvidia is doing just fine. It's up again, 3.72, over 2% at not a lifetime high, but in the vicinity. We were at a lifetime high just 3 trading days ago. So just kind of hanging out up here. And as you probably remember, Nvidia is weird. They don't, their earnings are like a month after everybody else's. So they're very off cycle. So we're not going to see anything from them for weeks. Broadly speaking, as you look at SMH, the biggest component of which is Nvidia, that one is up a little, 0.17%. Zoom in on that. And it's got sort of the same phenomena going as Nvidia, which is lifetime high a few days ago. But through any selling over the past couple of weeks, it has consistently respected this level, 281.82, as support. If it cracks below that, that's a little bit bearish. It broke above it, and it's been hanging out there safely ever since. But as I mentioned, Nvidia is quite a ways off in terms of its own results. Another big NASDAQ stock that I mentioned yesterday is Netflix. And we spoke about this with respect to its long-term price channel and its shorter-term price channel. And it was that in particular that I mentioned how the next level of support on this would be the midline of this channel. So just to kind of, that was a lot to absorb, but basically this price channel goes all the way back to when this company went public 23 years ago. And it's been within it ever since, banging within support and resistance, and using this midline as an important delineation between support and resistance itself. Shorter term, zooming in here, this smaller price channel is still pretty big, 3 years going. And the cool part is that as we got close to this line, which is the midline of that multi-decade channel, it hit resistance, got a little above it briefly, but went tumbling down. And what's going on now? Check it out. All the way down, and we're daintily perched right on that midline of the smaller channel. So notice how much smaller this drop is compared to yesterday. It's a little interesting that today's red, even though it's an up day at lifetime highs. But Netflix kind of needs to respect that really today's low as support. If we have another down day tomorrow, that really opens up the prospect of yet more weakness on this. Netflix has been doing pretty poorly anyway. Because of all this relief, the sigh of relief with these trade deals, a lot of your safe havens are selling off. Gold, GLD, which yesterday I mentioned was getting close to its resistance, is backed off again. So here's the lifetime high, lower high, and then a lower high yesterday. It really needs to get above this line to get the precious metals excited again. Still could do it. Today's a very modest diminishment. We're basically back to where we were on Monday. But yeah, no prize for that one. It did back off. And silver off just by the smallest little bit. And as I've mentioned, I really wouldn't consider this rally done until we reach that target up at 38.75. Still talking about commodities a little. Oil, USO, also down a little bit, 0.2%. Crude oil itself is actually the front month's up 0.17%, but USO is down a touch, really not doing much of anything there. And one other kind of anti-equity trade would be the bonds. TLT is down about 0.6%. This tremendous reversal pattern is still prospectively, it could prospectively complete. It's well a ways from doing so now, but it could happen. We're going to keep an eye on that, and it would require a push below this this giant pink zone I've drawn here, which is at around 82.68 on TLT. I believe next week, Wednesday, I suppose, is the next Fed meeting. No one's expecting really any action from that, but that's the next kind of key event for them. There's a term, a new acronym came out recently called the dork stocks. You may have seen it. I just seen it earlier today, but it's kind of like 2021 all over again. Meme stocks are a thing. Trading until recently ignored issues heavily is a thing. So you get things like, remember Tupperware of all stocks. Tupperware was a really hot stock for a while. And then Kohl's is one day, and GameStop back in the day, et cetera. So these sort of fourth-rate stocks become like super hot. And the dork stocks are the latest incarnation of that. They are an interesting sight. On the whole, long-term, they've been just horrible. Like here's the D of dork, which is DNUT, Krispy Kreme, a favorite treat of mine from my deep South upbringing. And as you can see, it's just been a horrible stock. It plunged from 20 down to like 2. It lost about 90% of its value. But recently, it has gone berserk. You can see the volume here. The volume was ambling along at 1 million shares, 2 million shares. Then all of a sudden, 145 million. It's just going to go insane. But these are it's like just hot potato. And we talked about this, you and I, before about open the past couple of days, which, by the way, is the O of dork. But yeah, Krispy Kreme here, it's up, but was much stronger earlier today. The O, as I said, is open door, which only back here late last month was a penny stock, and it blasted higher a couple of days ago, got up to almost $5. And what's it trading at now? Around 2.5. So a 50% drop in just a couple of days. And so we first talked about it here. And I likened it to musical chairs or hot potato or whatever metaphor you want to use. And this is exactly the kind of thing that can happen because you get these huge volume, and it's just the greater fool theory for miniature equities. The R is rocket companies, which of the dork stocks is the only one that doesn't look absolutely horrible to me. And then finally K, which is Kohl's, which has also had a pretty bad time of it. And just look at this. It was down here around 7. Just yesterday, it was at 21.39. And what's it at now? 12. So another kind of 50% drop. So crazy stuff. And these are of note because it's call options that have exploded on these, the volume. So bonkers. Anyway, as far as earnings go, the 4 biggies that we'll be watching, there's ServiceNow. I don't have positions in any of these 4, but we'll be watching them with great interest. ServiceNow, NOW, like so. Alphabet, or popularly known as Google, GOOGL. And Tesla, we listened to the conference call on that one because that should be interesting for a lot of reasons. And then finally, IBM, which, as you can see, has been having a fantastic run for many, many months. So those are the 4 big ones there. Tomorrow afternoon, not so much. I think Intel will be the big one. But
if you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.